The ANZ was the first bank out with its results this week, and it pretty well set the trend. While its first half profit of $2.8 billion was a record, its revenue growth was weak and there was a sharp rise in arrears, which points to some worries down the track. I spoke to ANZ Chief Mike Smith in the midst of a busy round of investor briefings. Well, Mike Smith, looking at your results this week, it looks like the picture that emerges is low credit growth, the lowest for a long time, and pressure on interest margins as well. So did this surprise you, or were you prepared for it in the way you're running the bank?
Oh no, it didn't surprise me. I mean, I think we've been highlighting the change that has been happening in the market for some time now. The fact that a number of the analysts have been asking when will credit growth go back to that we saw prior to the crisis. I mean, those days are over. That's not coming back.
Really? So this sort of credit growth that we're seeing, which is virtually nothing, how long do you think this is going to persist for?
It's going to increase, obviously, slightly more than we're seeing at the moment. But it's across the board. It's in corporate and also in the consumer side. As people are being more cautious, they are definitely saving more. There has been more deleveraging. And of course, you have a number of the major institutions which are, who are basically very cashed up right now. The margin pressure, well, that's something was inevitable. We've recovered a bit of margin, and the competitive environment being what it is, you're bound to see that start to come off again.
So is the only place you're going to get growth from through an increase in market share?
Well, you're going to have to put volume through the book, and I think the issue there is really the way that we've tried to look at that is two ways really. One is of course to increase the exposure to the growth markets of our neighbours, into Asia Pacific, and the second is really to skew the business away from just balance sheet usage, so to
towards
build up
fees.
Well, to build up in fee income in terms of foreign exchange, trade, cash management, etc.
Right, and the other thing that's occurring is an increase in arrears, both 30 days and 90 days.
Yeah. And the consumer book.
Are you getting concerned about credit quality now?
I'm more concerned about it than I was, because it is rather strange that it's happening without unemployment rising. I mean, normally you would see consumer arrears actually increasing in response to unemployment rising. Now, we're not seeing that.
Can you see what's actually going on in your book? Can you tell why it's happening?
Some of it is a bit seasonal. Over the holiday period, people tend to say, well, I'm going on holiday and I won't bother to repay the credit card this month and I'll pick it up next month. But there is a little bit of that. But I think interest rates are actually beginning to hurt a little bit now. So the recent rises, I think, are beginning to bite a little bit. And if you look at where most of this is happening, of course, the floods in Queensland actually had some effect on this, which again you
what's the situation among SMEs in relation to that?
SMEs,
small businesses.
We're not seeing that as much of a problem, but our SME proposition primarily is liability driven. It's mainly a way of attracting funding, and that has actually been on the increase. That's doing quite well.
Well, I asked because you've been talking this week about the effect of the rising dollar on manufacturing industry and other industries in Australia. Are you seeing any impact of that on smaller manufacturers and those who are exposed to the currency in that way?
Yes, we are. And I think that, and that's more in the commercial space rather than the SMEs. But, there are areas which are traditionally going to be exposed to a stronger dollar. I just use three examples, which was manufacturing, retail and tourism. But, you can understand that they're going to have to change their business model to compete with in a world where there are cheaper imports.
As you look ahead over the next year or two and you set the sails for your business, what sort of exchange rate do you think we're likely to see?
I think we will see in the next year it moving through $1.10 and getting even stronger than that. I can't see that there is anything to knock it off the perch, because it's not only the strong Australian dollar, it's also the weak US dollar. Yes. And when you think about what is happening in the States, I can't see them increasing rates for at least 18 months. And that will have an impact. So I think we're set for this strong dollar for about 18 months.
I mean, there's a lot of talk, has been for quite a while now, about the two-speed economy in Australia. Treasury and the Reserve Bank have been warning about that. But isn't it the case that in order to make room for the booming resources sector, the rest of the economy does have to shrink, in fact?
Well, I wouldn't say it has to shrink. I think it has to reinvent itself. I think what we tend to underestimate is the intellectual capital that we have available in Australia, and there are areas which are in massive demand in this new economic bloc, which is Asia Pacific. And I actually think that that is the opportunity for us. I think the big danger we face is we look at this and look at all the problems. And actually we should be looking at it and saying, okay, well, what are the opportunities that this actually provides, this fundamental shift? Well, precisely what I was saying. If you actually look at things like the demand for foodstuffs and resources as it increases, where is the value added to that? Where is the value added in education, in medicine? You've got this massive urbanisation and industrialisation going on our doorstep. We must be able to tap into that.
What sort of restructuring do you think the Australian economy requires, and what's the role of government in that?
I think that this is a structural change that we probably haven't seen. We certainly haven't seen it for 20 years, and it's something that we just now need to look at. The move of economic power from west to east is not something that's just going to happen and go back again. This is a shift.
You mean globally?
Globally.
Yeah.
Yeah. I wasn't talking about Australia. But I think that, because in Australia it's probably going the other way, isn't it?
To some extent.
I think that we have to see this as an opportunity. Obviously, the resource base, both soft and hard resources.
I suppose I'm thinking of, in particular, about the mining tax, the resources rent tax.
Yeah, and I think that's the sort of thing that I think we've got to be careful of. We've got to see this as the opportunity. How do we actually how does the industry in Australia actually take advantage of this? How does it change itself? I think, frankly, it's more to do with business. I think we always tend to say, well, what's the government going to do about, it's raining today, what's the government going to do about that? Well, I think we ask too much of what's the government going to do. There is no doubt that they could, I think, ease the business environment with possibly looking at tax simplification. I think that would be...
Possibly getting tax complication with the carbon tax on that subject.
Well, taxes, you look at the budget and the requirements that the Treasurer has right now. He's got a tough gig, frankly. I mean, it's not an easy job to do, to balance all this stuff. Because tax receipts are obviously down, so he's going to have to look for ways of propping that up.
So where do you stand in that debate?
In terms of a carbon tax, well, I think a carbon tax is inevitable. I think it'd be very difficult to say that it ain't going to happen. It's a question of how it happens, isn't it? And I think, what I am encouraged now is that there is now more debate with business. And I think that that's important. The government has just got to continue to really get and understand the implications and the consequences, and perhaps as important, the unintended consequences. So I think the signs are a little bit better there, yeah.
Thanks very much for joining us, Mark Smith.
Good to see you.